Dreams are powerful. They lift us. But if you're holding XRP and you're watching your portfolio dip while headlines promise paradise, that dream can start to feel like a trap. What if I told you the dream isn't completely wrong, but it's also not what most people think? In the next few minutes, I'll show you real numbers, on-chain facts, and institutional signals that explain why the XRP dream may be delayed, and what you can do right now to protect yourself. No memes, no hype, real numbers. Let's begin. First, why does the dream even exist? Many holders believe XRP can surge 10 times, 20 times, even more, and that belief comes from a few core narratives. That Ripple will win legal clarity, that global payments will modernize, and that institutional adoption will follow. Those narratives are not entirely fantasy. There are real metrics that fuel hope. Active wallet counts and adoption numbers have shown legitimate growth. Some data shows XRP adoption outpacing several alternative networks during specific periods, and large wallets holding millions of XRP have increased. On-chain activity, daily transactions, and new accounts, those are real signals, and every transaction burns a tiny fraction of XRP. Cumulative burns are measurable, and scarcity can slowly build. Add to this the slow movements of institutions, pilot programs, on-demand liquidity usage, and acquisitions that improve institutional rails. These are the foundations of the dream, but hold on. Legs alone don't make you walk. There is a flip side, a reality that most creators don't emphasize. And that's where many holders get hurt. Price isn't the same thing as adoption. The market price is an intersection of supply and demand, yes, but demand can be noisy, manufactured, or shallow. Shallow liquidity, small order books, make tiny trades look like huge moves. That's the first illusion. A candle on a chart can look dramatic, even when the underlying economic flow is thin. Then there's bot activity and spoofing. Automated bots create volume and fake momentum. Spoofing techniques can make markets move in misleading patterns. Those spikes attract headlines and clicks, but they often don't reflect genuine, durable usage. Next, institutional flows. A lot of high-value activity happens off-exchange. Banks testing liquidity corridors or moving large settlements often do so in ways that don't immediately show up on public exchange order books. So the real utility, the thing that should drive long-term value, can be invisible to retail charts for a long time. And then there's supply concentration. Ripple controls significant escrowed reserves. Scheduled releases and large holder behavior create price pressure. That's structural and serious because supply control changes how scarcity translates into market price. Here's a concrete point you must see early. The burn rate, the tiny pieces of XRP destroyed per transaction, has not been steadily increasing in a way that guarantees rapid scarcity. In fact, burn figures can fluctuate. A recent drop in burn rate shows that usage-driven scarcity isn't automatic. That's important. Quick pause. If you're thinking, so XRP is dead, don't click away yet. This is not a doom call. It's a reality check. Markets and price often lag real utility. Institutional adoption happens quietly, yet retail sentiment swings loudly. The mismatch between visible price action and invisible utility is the heart of the misleading price problem. Now, how do we convert this understanding into a smarter approach? First, measure the right things. Track the burn totals over time, not single-day spikes. Compare burn to daily transaction volume. Watch the number of active XRPL addresses and look for sustained growth in cross-border payment corridors. Check big wallet accumulation days. They often signal institutional moves. Second, manage risk like a professional. Don't stake your life savings on a narrative. Allocate a portion for the dream and allocate the rest to diversified positions or safe assets. Use stop limits, define take-profit zones, and avoid emotional trading. And if you plan to trade on setups you believe in, use a platform that gives you an edge. I use BTCC because it offers bonuses, lower fees for active traders, VIP perks, cashback, and tournaments that can reduce your cost basis when you trade smart. If you want to check it out, my link is in the description. Use it to claim the bonuses and perks. Okay, back to the facts. Third, stay focused on milestones that actually change adoption. Confirmed institutional pilots, regulatory clarity in major markets, stablecoin rails choosing XRP as a settlement bridge, and actual cross-border volume moving through ODL corridors. I know this is frustrating. Many of us have waited years. People call it a dead coin or accuse holders of delusion. But the right route, the intelligent route, isn't blind hope and it isn't panic. It's evidence first, action second. Let me give you a simple checklist you can follow today. Step 1, check exchange order book depth before you trade. Step 2, verify on-chain transaction patterns. Step 3, monitor institutional integrations, not only press releases. And Step 4, time your trades around events that change adoption, not mere narrative cycles. If you want, I'll drop tools and links in the description to help you check these quickly. And hey, if you thought charts would comfort you, try checking your account at 2 a.m. That's the real horror movie. Now here's the big idea. The dream can still be valid, but only if adoption follows through into real measurable economic activity. If it does, scarcity and institutional demand will matter. If it doesn't, price will remain at the mercy of sentiment and short-term liquidity. So how do you spot a real adoption milestone? Look for coordinated events, multi-bank pilots, central bank conversations that go beyond theoretical, direct regulatory actions that reduce uncertainty, and real payment volume shifting away from legacy rails. Those are the levers that convert promise into price. In our next video, which I'll link at the end, I dig into how price can be misleading and show a few data points that most creators don't cover. For now, remember this: don't abandon logic because of emotion. If this video helped you reframe the story, hit like. Subscribe for weekly deep dives. And if you trade, consider using BTCC. The link and bonuses are below. Dreams and reality must meet in the middle. If you want the dream, back it with evidence. If you want to protect yourself, act with discipline. Markets will always shout. Your best profits come from listening to the quiet facts behind the noise. I'll see you in the next one.